Hey guys, Adam Rose, Vice President Senior Loan Officer of Western Ohio Mortgage here in Sidney, Ohio, and this is another episode of the Mortgage Guy Podcast. And today we are going to discuss not really a hot topic, but trendy stuff, right? Manufactured housing, right? It's been around forever. But, Fannie Mae and Freddie Mac, they're making big pushes on using manufactured housing to kind of help, suit or kind of fix the housing shortage with the Manufactured Housing Advantage program that they have. But we're not going to talk about that program specifically. We're going to educate you about manufactured housing in general, all right? What is manufactured house, right? A lot of people get confused with modular, which will kind of give you a slight difference. But manufactured home, think of single wide, double wide, okay? They are going to bring this property or this home out to the site and place it on a foundation. It comes in one piece, maybe two pieces. All right? Comes on a trailer hitch. They remove the trailer hitch. Right? Slap it together. Done. All right? That's what a manufactured house is. All right? It's got a steel chassis underneath. Okay? That is your support. That is always a telltale sign. So, like, if you go to a property and you're like, I'm not sure if this is manufactured or modular. Go in the basement, go in the crawl space, whatever. You see a couple steel beams running across this puppy. That is manufactured. It's probably a double wide. Okay? So that's what a manufactured home is. What's modular? Because everybody likes to use that word modular as well when they're trying to describe a manufactured home. A modular home truly is stick built, but what it is they're building these walls in factory and then coming out and setting them or anchoring them to the permanent foundation, block, basement, whatever, what have you. That's the difference. I like to reference a couple local builders that do that. I keep their name out of it, but there also are some local places that do those. They are truly stick built. They're just not custom built on site at the home site. All right, they're in a facility, so it keeps your lumber nice and straight. We don't have any issues with that, and it's a nice home. So, anyways, let's talk about product, not specifics. We're not going to go crazy, but actually, all your conforming loan products, actually, you can do manufactured housing financing. Not all lenders do them. They're a little bit different, but we do. So in general, your home has to be built after 1976. All right? That's when HUD started to regulate that industry to ensure it's meeting their standards for home ownership. That is a big piece of this. So take a look at the county auditor site, and you'll be able to see what year the unit was built or manufactured. And it's not always 100% accurate, but 1976 and later. Okay, now a little nuance to that. So that's for VA, FHA, and conventional. Now, I'm not sure if VA changed anything, but about 6-7 years ago, I recall that we did one, I think it was built in like 1971, but it had some very weird guidelines for VA. No other product, okay, just FYI. 1976 later, always just go by that rule. But there's an exception to the rule somewhere out there in the VA guidelines, and I might get hammered with this by other lenders. I did not double check it before I came into this podcast, but we had to do some like wind, hail tests and something else. It was something very odd. But anyways, stick with 1976 later, you're good. Now, USDA will also do manufactured housing, but has to be 2006 or newer, okay, in essence. They will allow it. So remember, USDA is the no down payment. Your most common is going to be your conventional and your FHA financing for manufactured homes. And the big reason is because I'm not going to say big, but there is a rate difference between manufactured home and stick-built home, okay? And everybody's like, well, that doesn't make any sense. You're discriminating against a specific type of property. Yes, we are. Yep, can't help it. There are some more risk factors involved with manufactured homes versus a stick-built home. And one of those big things and big differences are there's actually a remaining economic life on a manufactured home. So that's one of the big differences between buying these properties. So when you get your appraisal back, that's one thing that can come up and bite you right in the rear, is if the remaining economic life is for less than your term on your mortgage. Let me give you an example. And we've run into it before, and we just have to make adjustments. So doing an FHA deal, I don't know. I think it was like a 1980, 1982 built manufactured home. We were doing a 30-year fixed rate mortgage through FHA, like I mentioned, and the appraisal comes back, and then based off the condition, I guess the condition wasn't great. They gave it a 20-year remaining economic life. And what that means is that I cannot finance it for 30 years because they're basically saying this thing's going to depreciate out over the next 20 unless there's a lot of overhaul or remodeling or what have you. So we have to flip it to a 20-year mortgage. So beware, that could be something that bites you a little bit. Might be a question to ask your lender, hey, if I go after this property and it comes in short, do I qualify for a 25-year? Do I qualify for a 20-year? I've never seen anything less than a 20. When that's happened, a lot of times it's like we have 27 years remaining, some weird number the appraiser likes to pull out of their butt. So heads up there, it's a good thing to go in there and with your lender and have that conversation to make sure if you had to cut 5 years off your term, can you still qualify on your debt to income ratio? So heads up there. There are rate differences. Okay, right? I know I kind of touched on it just slightly, but it's a little bit higher risk mortgage, higher risk property, mainly remaining economic life, and it's just built differently. And so rates, there's a little bit of a hit. I can't go into specifics, but usually it's like a quarter of a point, 0.375 hit on the rate. Each product's slightly different in regards to pricing. Not all, like I said, not all lenders take manufactured houses, okay? So heads up there, make sure you're asking those questions and you are informing your lender that if you're going to go look at a property, it is in fact manufactured. Have those conversations with your agent, and that way there's no miscommunications, no misunderstandings on rates, terms, stuff like that, okay? It also, big one on manufactured homes, it also has to be your primary residence, or it can be a second home. The second home's introduced in there because a lot of people buy a second home in Florida or down south, wherever, and they go to manufactured homes because they're usually priced a little bit more aggressively than your stick-builts. So principal residence or primary residence and second home. No investment properties, all right? Doesn't allow it. Fannie Mae, Freddie Mac, I just double-checked their guidelines, make sure I wasn't wrong. They don't allow it. So we're not putting 25 or even 35% down on these things and buying it as an investment property. You will have to buy that in cash if you want to entertain that idea. All right. Some property specifics in regards to guidelines on manufactured housing that you might run into, okay? So a lot of places also don't do single wides, okay? We can do them. Again, hit on rate. It's a little bit different than a double wide. But it has to be at minimum 400 square feet. Okay, some weird stuff out there. Again, built after 1976. Now, the cost associated with buying a manufactured home, not only is there a small hit on the rate, right, but closing costs are typically a little bit higher, and mainly because you have to get a structural inspection, all right? So you can't just call anybody, a regular whole house inspector, and say, hey, I need you to inspect the foundation of this home, make sure it's good to go. No, you have to get a structural engineer to give you a structural certification on the foundation to ensure that the property is permanently attached, is attached appropriately, there are no issues, okay, and it meets HUD guidelines. And I always say HUD because regardless if you're doing conventional financing or not, it has to meet HUD guidelines, okay, because HUD is the one that is regulating the manufactured home industry to make sure it's compliant for financing. Data plates. So this is a common issue, right? It's not always there. So when these homes come from the manufacturer and go to the home site, on each side, each end of the home, there's these little data plates. They're called HUD data plates, and it has serial numbers and all this information on it, when it was built, all this fun stuff, who the manufacturer is, and we need to see those. Now, a lot of times, homes have been recited or whatever, and appraisers aren't going to pull back citing to try to find it. It's just not going to happen, okay? But not only do we have the structural engineer costing a couple $100, but now we got to look into these data plate situation, and if we can't see it, we have to order something called an IBTS label certification, which is like $175. So that's going directly through HUD's. It's not through HUD's site, but directly through HUD. It has all the information and data, and we're going to pull some information. There's these little labels either on the inside of your cabinet or in your breaker box. You'll open it up. It shows your manufacturer has the serial numbers and all this stuff. We plug that data in, and it validates some information for us to make sure we're good to go for financing. So just a heads up, those are some of the additional costs involved with buying a manufactured home. And another one, and we've only run into this a couple of times, the home cannot be moved, okay? I put that in quotes here, right? Because obviously it's being moved from somewhere. So what they mean is, if we have a manufacturer, I don't want to name drop, so ABC Homes that builds these manufactured homes, right? You go, you buy one. They are going to deliver directly to your site, right? Your home site, your real estate, and place it on a permanent foundation. That's where it stays. Now, if for some reason you're buying a home, a manufactured home that was, I don't know, let's say it's older, right? It was built in 1980 or something like that. If for some reason, and this has happened, someone places it on their site and they're like, hey, I want to relocate to Tennessee, whatever, they can have them detached, moved to their new home site, and placed again. If that happens, no go on financing. Yes, no go on financing. All right, you heard me right. And the reason is because when you take it off that permanent foundation, they're concerned that there's going to be some structural integrity issues. Once you place it, it settles, you release it, right? You remove it, put it back on a trailer, put the wheels back on the damn thing, and move it somewhere else and reattach it. All right, they're concerned about the structure. So it is a no-go on financing. So that is something that I can't just automatically tell. A lot of that's going to come from that IBTS label certification when we send it through. It's going to tell us where it was sent, where it was manufactured, where it was placed. If it was placed somewhere else and got moved, we'll know this information. So that can bite us a little bit. Now, again, it's very rare. It's uncommon, but it can happen. And the other thing is that's a little odd with manufactured homes. Flood zones. Okay, manufactured homes and flood zones. We can run into some problems on this, and I actually ran into one last year, not knowing it was actually in a flood zone because it was out in the middle of nowhere, and I think there was a creek running around their property that apparently does, in fact, flood because it popped up on the FEMA flood map. Now, if the main floor of your home on this manufactured home, single wide, double wide, triple wide, don't matter, okay? If the main floor is below the 100-year floodplain levels, the elevation, no go. No go. If you're on a basement, the bottom floor, okay, the floor of your basement has to still be above the 100-year floodplain elevation level, or it's a no-go, okay? Heads up. So when you're looking at these properties, we have got to pay attention to a lot of these little nuances with manufactured housing before we pull the trigger and say this place is financeable. All right, so those are some tips, some tricks, some things about manufactured housing that you may not know, and I hope it helps you out. If you are shopping for one or you find a property that's out in the country and it's just something that you weren't sure it was actually manufactured and you thought it was modular, some tips for you when you're out there shopping. Now, one last thing. We finally buy this house. We go to closing. You own the property. Rates drop. We want to refinance. Refinancing's fine, okay? However, if you decide that you want to tap into equity and do a cash out, across the board, 65% cash out on your loan to value, where almost every other loan program is 80% cash out loan to value. On manufactured homes, it is 65, okay? So, for example, if your value of your home is $100,000, the maximum loan amount you can have is $65 on a cash out. Has nothing to do with the purchase, okay? On a cash out only. So, just a little tip there. Don't want anybody getting into this and thinking that they're just going to start moving money and pulling money out of their home right away. There are some different loan-to-value guidelines. All right. I hope that was helpful, guys. So if you're out there shopping for a manufactured home, don't be discouraged. We do it all the time. All right. We finance these properties a lot. It's just there's some little nuances that we have to pay attention to. So make sure you're communicating with your real estate agent and make sure you're communicating with your lender if you do come across one of these properties you want to put an offer in on, to make sure you're still good to go and the property is still good to go. All right. Make sure you guys subscribe on YouTube. Check us out on Apple Podcasts and Spotify, and we will catch you all next week.